people did. So for more on finance now, we're joined in the studio by Rod North, Executive Director at Bourse Communications, changing gears yet again. Rod, good morning.
Good morning.
So what's the latest out there on the share market?
Well, I think it was interesting, particularly to see what's happening in the US because, you know, that announcement that Larry Summers isn't going to contest that opportunity to be the Federal Reserve Chairman, which comes up in January. The market loved that, but of course that still leaves some doubt as to who might fill that position. I think Janet Yellen's probably the most likely, and I suppose it gets down to, you know, it's better the devil you know than devil you don't, and I think the Americans really don't want to see that stimulus withdrawn too soon. So as a result of that, you know, the US market's gone up quite a lot last night, 115 points. I think there's that feeling that the recovery's really kicking in the US, but they just want to keep that monetary stimulus in place for a bit longer. And Larry Summers was probably looking to withdraw that if he took that Federal Reserve Chairman's position's role sooner than later, and of course that's helped our dollar rise a little bit last night, of course, and it's not good news for the US dollar, but it's certainly good news for the Australian dollar.
Yeah, it's had a bit of a mini rally, hasn't it, over the last few days?
Yes, and I think, you know, I've always believed that I think the dollar would stay around 90 cents for the remainder of the year, but I think there's been a lot of other expectation that it would come off. But it really won't be until we see that stimulus withdrawn and the US rates start to move up that we'll see our dollar come down. And you know, as a result of, you know, what's happening in terms of selecting that Federal Reserve Chairman, I think the jury's going to be out on that for a while yet. So I think we've still got a bit of time seeing our dollar, you know, still around that 90 cent level.
The spring auction season has opened in earnest, and the high clearance rate and the good money being got, there seems to be a bit of a shot in the arm for the housing industry.
Well, yes, it does. And I mean, we got some data out from RP Data yesterday showing another increase of 0.5% for the month, but in particular for the year, house prices across the 5 mainland states have risen 5.7%. I suppose the issue we've got to be really watching here is now that we've got interest rates, you know, at 2.5%, the cash rate, which I believe is an emergency setting. I mean, that's really stimulating the housing market, and we've got to be a bit cautious about that because we are seeing, you know, very high clearance rates across the country, and people have got to be very careful, you know, when they go out and borrow money, because we could, once the economy starts to kick back up, you know, we could see that cash rate start to move up quite savagely.
Another percentage point or two.
Percentage point or two, which means if you haven't sort of locked into a fixed rate, I mean, we've got 3-year fixed rates now around 4.7%.
Which is pretty good.
The 5-year, if it came under 5%, you'd have to be really tempted to have a look at that, because the last thing you want is to go out and buy a house and borrow a lot of money and find that rates might go up 1% to 1.5% over the next 12 months or so.
Rod North, good to see you again. Thanks so much.
Thank you.
Thank you.